Hey guys, this is Mr. Energy. It is Friday. It is September the 17th, and I hope you guys have a great Friday and you have a great weekend. And what we're going to do today is look at one of America's super majors, Exxon, and I'm going to go through a couple of sort of slides showing the fundamentals of the company and demonstrate at the same time why I might not even be interested in buying Exxon with your money, let alone mine. So what I did was I put together a quick presentation on Exxon. The first thing I did was I went to ExxonMobil's website, and interestingly enough, the entire website has been updated to reflect things like climate solutions, energy and innovation, sustainability, carbon capture and storage gains, wide industry support in Houston. So if you just open the website, everything right from the get-go is ESG and specifically environmental. And you might say to yourself, like, why would that be the case for a company like Exxon, who surely has an enormous amount of information that they could possibly share with the public, let alone their investors? Well, the first thing, just sort of by way of a bit of a recap, it's not too frequently that I would quote the New York Times, certainly not as a reliable source of information, but in this particular instance, it doesn't really matter because it's a story that is just a few months old. On June the 9th, 2021, the New York Times reported that Exxon's board defeat signals the rise of social good activists. The energy giant's stunning loss was the work of a tiny hedge fund that believes investing for social good is also good for the bottom line. Well, I'm sure the majority of you would remember this because, as I said, it's just a few months old, but it was a stunning defeat for sure by this little tiny hedge fund in terms of defeating Exxon's board. Let's take a look at the company and rather take a look at the fundamentals instead of the news. Exxon's trading at around 55 bucks. As I said, it's a super major. It has a market cap of 234 billion. That was as of a little earlier this morning. In the 52-week range, we can see that there's some potential run rate just to the right of center on this little graph with a most recent high in the 52-week range of almost $65. I'm not sure when we will see Oxy, I can't help myself, Exxon at $65, but I don't think it'll be very, very soon. But that's just based on gut feel, not based on anything else, because if you ask me what Exxon stock will do, then I will say it will either go up or down. If you're a dividend investor, you might like this one because it currently pays a dividend of $3.48, which is yielding on an annual basis more than 6%. So the dividend is quite rich and quite nice. It's 50%, 51% held by institutions and less than 1% short. Even though I might not want to buy Exxon, I certainly would not want to short Exxon because it's more likely that it will go up, the stock price, than down. Let's take a quick look at the balance sheet. Just quickly as a snapshot here, I'm looking at two different things. So the balance sheet consists of three components. The assets have to match the liabilities and shareholders' equity. If we look at the assets, specifically, I'm looking at the current assets. I can see that Exxon has current assets of almost $53 billion, which includes approximately $3.5 billion of cash and almost $30 billion of total receivables. At a glance, that looks quite impressive for this particular super major, but let's look at the liabilities. The liabilities show you currently a variety of different entries with a bottom line that shows you on the current liabilities that Exxon has current liabilities of around $62 billion. Now, I just said the assets, the current assets are about $52 billion, and the current liabilities are about $62 billion. This is not a good picture, and as a result, Exxon immediately drops to the bottom of my favorites list when it comes to energy. Valuation analysis. There's no earnings available, so I can't look at the PE. Price to sales and price to book are the most appropriate. Exxon is the little gray block, and the industry is the vertical little black line. And you can see Exxon is a prolific underperformer in sales to book. It's currently at 1 times and the industry at 17. Price to book, that's at 1.5. The industry is at almost 3. So this does not look great at all. How about profitability? Pretty much in line with the rest of the industry, which, by the way, is not good. But this is something that you can at least use as a benchmark to measure yourself against. If you really want to measure yourself against another company, you should probably pick one that's a little bit more profitable, as opposed to using the industry as a benchmark. But anyway, for whatever that is worth, Exxon is quite efficient at generating a profit. It generates a profit of about 30% on a gross basis. This is the trailing 12 months, and the industry is at 28, so about the same, as you can also see on the little graphic. But then Exxon's operating profit margin drops to negative 10%, and its net profit margin drops to negative 6%, underperforming the industry significantly. So this big old giant reminds me of a book I read some years ago, where Lois Gerstner, who used to be the CEO for IBM, wrote a book saying, "Who says elephants can't dance?" Well, I don't know if Exxon has the ability to dance, but it certainly needs to at least try to rock and roll for a little while in order to get some energy. Excuse the pun. Dividend analysis, I talked about that briefly. I said Exxon's yielding more than 6% on an annual basis. That's pretty good. Not really much to report here. The industry average is kind of irrelevant in the context of this. Most people who own Exxon would be owning it more for the dividend from an income point of view, rather than the stock appreciation. Effectiveness, if we look at Exxon compared to the industry, once again, return on equity, return on assets, return on investment, return revenue per employee, trailing 12 months, it underperforms the industry as a whole significantly. This company has a suck factor, which as a general rule, slide after slide, as I'm showing this to you, is not making me want to jump up and open a position in Exxon. Unless I'm looking for a 6% yield, hoping, of course, that's sustainable. From a financial strength point of view, another horrible picture. The total debt to capital ratio is not too bad at 26% compared to the industry norm at 40. We know some of the companies, including some of the positions I have in my existing portfolio, long positions, including companies like Occidental Petroleum and Energy Transfer that I talked about yesterday. The debt to capital ratio is more like 50, 60%. So at a glance, this doesn't look too bad. So for the most recent quarter, Exxon's total debt to capital ratio being significantly below the industry average looks pretty good. The change in debt also looks pretty good. The quick ratio is absolutely horrible. It is at 0.5. It needs to be at 1 or above. And the interest coverage is like, whoops. So if we look at the top of the slide here, the company's quick ratio has a value of 0.54. It needs to be 1 or above, which shows that there are not enough liquid assets to satisfy current liabilities in the event that operating earnings are unable to. And the operating earnings are suspicious just at a glance. Also, what do the guys at TipRank say? They say it's an outperformer. They rank it 9 out of 10, say it's a moderate buy. Don't care too much about blogger opinions and hedge fund activity. The insider activity says not available because there's not enough data available. We'll look at that one in just a second. I don't really care too much about TipRank's investor sentiment. I don't really care too much about the news sentiment. The technicals are positive, which is a good thing. The fundamentals are negative. I don't like to see red numbers here. This just sucks. So the fundamentals are not good. Exxon's stock forecast and price targets. We have 11 analysts providing a rating here and saying there's a upside of about 25% with a target price of around 69. Hey, you know what? Exxon could definitely get into the 60s for sure. I'm not sure when it's getting to 69. I have very little confidence in Exxon from a stock appreciation point of view. If they can maintain and manage to sustain that current dividend yield, it might be interesting from that point of view. But as a stock to invest in, it does not look that attractive to me. So on both these TipRanks slides I just showed you, the rating 9 out of 10 plus the moderate buy based on 11 analysts, I'm going to say no, this doesn't look good to me at all. Let's take a look at the insiders. To be fair, the last insider trades, according to the SEC filings, were some huge trades by two guys, some huge buys. This big, this blue line over here, this is January 21. A couple of the insiders bought, I think from memory, it was about almost $10 million, and the other one was about $1.5 million worth of Exxon stock. So there were a couple of buys, but it's now 7 months old based on the historical data. So there's not a lot there. As I did yesterday with Energy Transfer, I went to CFRA again just to see what these guys say. They currently recommend Exxon as a buy. It's got a 4-star rating and a 12-month target price of 64. I think the 64 is probably more realistic than the tip ranks average of 69. But that, again, is just an opinion because, you know, stock prices go up and they go down. And very often it has no relationship with the fundamentals of the actual company. This is also from Exxon's website, emission reduction commitments. You can see down at the bottom, carbon capture, emission reductions, producing energy through certified natural gas, etc. So guys, this is sort of the snapshot of Exxon. You know, if you have time and you enjoyed this video, please subscribe. Otherwise, also feel free to comment and let me know what you think of Exxon. Are you long? Are you short? Are you playing it at all? Maybe buying some puts or something on Exxon? Let me know what you think, and let's get a discussion going and see if Exxon is something we should be paying attention to, or more attention to, or not. So happy Friday, and have a great weekend, and I'll talk to you guys soon. Bye-bye.